Good morning, guys. We have a change today. Max has his hat on backwards, and I moved my screen and camera so that I can forward face for you guys in the future. So,
as requested.
As requested. So
we listen to you.
We do. We listen to you guys. So you guys will get to see more of my ugly mug. And that's really about it. I do have to rearrange my desk to make this work probably in the future, though, because it's just not. Everything kind of got jumbled doing it. It was last second thing. So I'll fix it for tomorrow. But that said, how many people we got in here? 13. I'll take it, right? Let's jump into the charts, guys. Everybody wants to know about Bitcoin, right? We just did our members update last night. And anyone that's been in the group knows what levels we've been looking for. And it's really been 24/7 as the next resistance. And so I'm actually going to go to a cleaner chart right here. And this is something I want to point out. So this is a technique for pulling forks that I created myself. You can see it's attached to nothing. I put it on my Twitter. And this is essentially an extrapolation of the next month's trend from the prior session's data and using one outlier pivot to project where the high and the low of the trend would be depending on direction. And you can see we've caught the high exactly. And we've come back to what old support at 24,297. But this 24/7 level is going to be important. I want to use this chart specifically because it's such a clean area and I don't have a bunch of junk on here. So I think you guys will all appreciate that. So when we look at this, you can see that you have these weekly candles here that like settled up the opens and closes. This was your resistance here where you front ran it by a few dollars. And then you've come back up and taken the level. And as we zoom in a little bit closer, you can see that what have we done? We've come up above the WSFP at 24/7, turned it into resistance, back to support. Now we're looking back to resistance. So 24,700 really is in the medium term for me, the level that I want to see claimed. You'll notice that this right here has been resistance for us on the weekly time frame. This week. So that's 1, 2, 3, 4, and is now resistance again on the fifth iteration. So I'm not expecting this to derail the rally. I still have my broader target up here at 26,724. The timeline on that, I've given you guys that. I've gone over this publicly and in the group. I've shown you guys how I pull these. And I did this again, all of 2021, nailed that entire large range to the T. Every reversal until the breakdown was based on sign line and fib time. And we do have that coming in our high time frame channel, lining up very, very nicely right here. And you can see that I've just put the box right there. And so this box was not random by any means. I'm expecting us to peak out on this trend on at least a medium time frame basis for a larger pullback at around anywhere from 26 up to as high as I think I had it marked here, $28,000 to $29,000. So it's a big zone. This is a really big box because there are a lot of levels here. However, this is the time frame in the window in which I'm looking to gauge for some form of a reversal. And what I mean by that is, not a trend ender, but you could see something like this when we go back to old price action. Everyone likes to reference this run up right here. This is right into those yearly pivots that we've talked about in the past, right? And that's actually our target right now. So if we take a peek at that, this on Bybit's different. On BLX, this actually shows a different story. Very interesting. Very interesting indeed. On the BLX, the average of price is actually right here. And so what I would expect is a move up above the pivot, maybe into some of those higher resistance zones, and then consolidation around this area. Will it give us a higher time frame pullback where it rolls over and starts, putting in a higher low? I'm not really sure. That's something we have to gauge, because if you continue to make these higher lows like you did here, this is obviously, I bet everybody and their dog was calling out a Head and Shoulders. And you know how I feel about pattern trading, guys. It's just not that reliable, in my opinion. I think it's better to gauge each move by horizontal support and resistance and averages that make sense. So what I'd be looking for is a move into this zone. And one thing that stuck with me is I watched one of my very first flip, and we start playing the game. You can see that I've had this box on this chart. It's right here, 26,741, and it's lined up right here with 24. This weekly swing fail pattern actually. The irony of this, right? The irony. So we start looking up to this direction, and we do so in this time frame. And then it becomes a question of, does time win out, or does price continue up and start a new trend as well in time and in price, meaning that it took us this long to make this move down, just like when we were timing out this one. All we were doing on this case was timing out 6 months worth of price action. I'm going to get rid of this sign line so it's not overlapping at all. And you were just looking at this in terms of, okay, I know that we could be in a bigger range in consolidation. And if we're going to see that, how do I calculate about how long that's going to take? We're just looking for these pivots here. They're based on a certain session data because it overlapped both the low for that session and the high. And you can see right here, there is your low coming in. Here is actually your all-time high at the highs of the move. And then back down, getting reversal here before what? Coming into that yearly pivot we were just talking about and breaking to the downside. Okay, breaking our time and price. So we're no longer expecting this to be valid. It's valid till it isn't. So the same can be said for the lower time frame one. Actually, it's based on the same time frame, but just a different section of price. And now we're looking at this session saying, okay, is this going to remain valid? Will we see a larger consolidation, or will time and price deviate and then we see a new trend begin, which is what you saw right here. And then we can calculate that trend as well in different manners. We can get into that when we cross that bridge. I'll probably cover it in the group this next week though. So yeah, 24/7, as you can see, this has been the resistance both daily and weekly. And I'm pretty sure we could zoom this out to the monthly and you guys could take a look at that, right? So if we take a look at the monthly, you'll even notice, oh no, the monthly is not. The monthly is, yeah, the monthly is. It's right here. I think I got rid of the 24/7 high when I deleted that channel right here. You can see this is also a monthly resistance. So showing you that on the high time frames, this level does need to get flipped. And I would expect that if we start closing dailies and turning this into support, so like a daily closure above it, you know, if it's a really aggressive order flow, maybe even a 4-hour, we'll make this next leg up. Now, there are some hiccups in between. People in the group have those levels. There is an untapped 60-day right here at 25,838. This is just left untapped from all the way back here. In our 60-day price action average coming in to the second half of the year last year. So we had a 2-month span, and I track 60-day cycles just like I track, you know, 30-day cycles. This level should be expected to be an average of price. It may get blown through, but it also could be one of those things where if you're looking for a swing fail pattern of the high here, right, at 25,211 or this low, however you want to look at it, if you're looking for this, this is the level I'd keep an eye on. And the reason being is I don't know that it'll actually give a swing failure pattern, but what it will do is give you at least a level to set an alert at, and you can go from there, right? You don't have to take the trade if it's not actionable, and we can talk about that because we were expecting that if you broke 6M121 here on a convincing basis, what were we looking to do? Run the gambit, right? We knew this was going to be the area of interest right here, this 23,245 to 349 area I gave you yesterday. That was the area of interest. Go down to the 5-minute. What do you notice? This is exactly where we go. This is a weekly backfill on the point of control. Almost no resistance here. Turns into support, so there's no reason to short it. And there's nothing between you and that 24/7 resistance at that point. You're just marking your level saying there could be shorts here. However, there was nothing in the order flow that said you should be looking for a swing short. I didn't even take the short up here off of this January pitchfork that I'd drawn up because it's just one of those things where it didn't seem like the best thing to do. So I've just got my levels marked. I know what my broader targets are, and I'm waiting for those positions to get hit, you know, over time. And so I'm expecting that between now and about the 27th of February. And we're not doing this because we're trying to predict the future, guys. We're doing this because this has been information from prior sessions that we're just using to calculate new session data, right? And we know that there's a single print that front runs this yearly pivot as well. So that is something to bear in mind. And we've seen price action like this before on the BLX, where we go back in time because we don't have that buy bit data. And we're going to go to log scale for this. And you will notice that we did front run our yearly pivot here. Okay, so one of the few times we did not formally tap it. And you came back and established support after about a 30% drawdown before moving up. So that's why it's important to keep these areas on the chart in mind, especially in my opinion, anything over 25,838 or 25.2. If you're going to be a little more conservative, you could. Anything above this level, you're really looking at this going, am I longing the range highs to potentially this target? You can if you get a trade set up and you got a tight invalidation, meaning that I would start taking profits here, here, and here, and then leave the rest to run up to these higher levels, obviously. But you have to have that tight stop loss, because if you don't, it can very easily come up to these levels, as I've talked about in the past, do something like this, and then come all the way back through the level. And then if you took no profits, now you're in a losing trade with a wide stop loss. So you have to keep that short stop loss right here and trade it up. And you have to pay yourself at this point, at least if you're using leverage. If you're a spot holder, it's a little different ball game. You should still have a stop loss. You should still consider your risk in that, but there's a lot more leniency because you're not getting, there's no chance of liquidation unless Bitcoin goes to zero, which seems pretty unlikely to me. Let's see. Let's get to the chat. We got some Sin City guys in here. I see some Olas. Love seeing that. Good morning, good morning, good morning to all of you that are here. Really appreciate you guys being here. And let's see. What happened to CVO altcoin lives? That's a great question. We will bring that up to him. He does post a lot of altcoins in the group still, and he does go live with us on Mondays and Sundays and cover that, and or Sundays and Wednesdays with us, and covers specific setups he's looking for that he's identified, also coins that people request. And then in terms of his public live, he does get on, he's every Monday, he will be joining Forrest or OX Stacker, Sistine Research. He'll be joining him every single Monday at 10 p.m. doing an altcoin breakdown as well. Thank you, Nick.
If you want us to chart some altcoins, by all means, drop us a message in the group, in the general chat area, and then we will look at it, build the chart, and come to it the next day. If you want to...
squinting to read the chat. I'm sitting further away from the screen that it's on, so I'm going to do the thing that I try not to do when I'm wearing a hat. It's uncomfortable and put on the glasses. So, but no, it's a good point. And Max, he can chart altcoins and all kinds of stuff too. And the order flow, I would assume it works the same way. I just don't know if the volume is the same in terms of what he might be looking for like good lows and highs. I think the volume's obviously going to be less because it's an altcoin, right? Versus Bitcoin, but that doesn't mean it can't be used. So it's just getting a matter of getting used to, I would think.
It's gauging the behavior of it.
Yeah, I don't really have anything else. Before I get into the DXY and the SPX, do you want to cover what you had for order flow? Guys, important support to hang on to me is about $24,000, give or take. I think it's kind of a region, but if 24,000 was lost, I would, consider broader corrections at that time, and that maybe the trend is coming to an end in the short term, and we should look for that higher low potentially somewhere else. It might be in line with what Max is thinking. I'll let him go over that.
Sure, let's get into it. Let me share my screen. Voila. Okay, so we'll start on this chart first, and I just want to go over what's really occurred, yesterday and today. And we were telling you guys, there was simply no short signal in the order flow in this entire move up. There really was none. It was kind of, if you were not in a trade, if you're not in a long, it was a very boring day. Great if you're in spot because you didn't have to do anything, didn't really have to manage a position, just climbed. It was really easy. It was a really great day. It just went up. However, there was no single region on the chart which signified one to take a short. And, it initiated with a big short squeeze. You then had some positions enter late at night for me. And then you had another squeeze of those positions. So what you'd want to then see is, buyers start to come into the market to hold price up. I'm going to mute you, Magic, because your mic is coming through. So when you see the buyers then come in, that gives you some support in the trend that the trend's not just going to completely fall through. And today you've certainly seen that, but you've seen something very interesting as well. If we zoom into the charts, you can see that you've had plenty of buyers coming in today. There has been regions, specific areas that you can pinpoint and literally look at the delta, the volume, and the open interest on these candles and see there was a huge amount of buying that was taking place. But the interesting thing was that it really wasn't taking price anywhere. So that shows you that there's been a lot of liquidity on the limit order side, so that when these people are aggressively taking market orders, because that's what we see here, we see market orders. We're not seeing the limit orders. So you have to take that into consideration. If you're seeing a lot of heavy market buys come into the market and failing to take the price anywhere considerable. That shows you that someone is effectively just on the other end of that, holding the price down. So when you've seen all this buying taking place and they're really struggling to even break the VWAP, really struggling, and then you see something like this and you get one candle of shorts, all selling imbalances come in, and it pretty much wipes out all the work that the buyers have been doing. Kind of shows you that, okay, one might want to get into a short in this region, and this is giving you the only two possible trades one could have taken today, other than the long. Two possible shorts. You could have shorted here after you've analyzed the strength, or shorted here when the New York session effectively officially opened and you got a swing failure pattern of all these highs. They're the two shorts that one could have taken. And the other interesting thing that's occurred today is look at the open interest. It's had a huge climb. It's pretty much back to where it was before the move started. So with that being the case, what we can expect is, so open interest is a contract between a short and a long. That's how futures market runs. And what you can expect with high open interest is fast, volatile moves, because effectively what it is it's people effectively locked into their positions. So if you see high open interest, prices going to tend to gravitate towards where the liquidity is. So you can really use that to get into some swing failure pattern trades, which are oftentimes the best trade. Well, they are the best trades that you can get into. So knowing that the open interest is high, knowing that we've now got, considering this little move that we've got here, where you've had a load of shorts enter at the lows, you've got shorts entering, longs entering, both trapped at this current moment in time. Okay, they're both trapped. It offers us a lot of possibilities coming up. I'm expecting a bit of fuckery to take place. What do I mean by a bit of fuckery? We get a big wick up, we get a big wick down. One could come first, but I'm expecting something of that sort, just to take out all the people that are, uneasy in their positions. And we have to think, where are you going to be putting your stop losses if you're in a short here? Well, either here or above the high, perhaps above that Q3 high, which was the high that Magic mentioned, which is also what was support in our 30K range, I believe it was, way back. They're the type of places you're going to be putting a stop loss for a short. For a long, well, I'd say that the people that are longing up here probably have to be forced out of their positions. If you're buying up here, you are trying to catch the end of a move, and it's normally not the smartest thing to do. And with this move that we just had here, though we've not had a drop in open interest, it does, it's clearly going to have to come down harder, and it's going to have to come down harder to that region where Magic mentioned, that 24K region, and really punish these guys that have entered here. The other thing that I really want to discuss is the single print that we've got, which comes in slap bang on that 24K region. And I went over this in the members stream, but I might as well go over it here. We can range above these single prints for quite some time. Okay, we did it back here, but it still got closed. They are important regions to have on your charts. They're inefficiencies on the chart. They tend to get filled. You can see all the ones on the intraday timeframes up here. Look at how many of these get closed. It's inefficiencies on the charts. Price gravitates to fill in those inefficiencies. Yes, you can use volume to look at them, but you're not always going to see it as clean as you do with TPO. So looking at these and analyzing where we've got these coming down to that 24K region, it just makes it even more important to hold that level on the chart. Now, if lost and you do start to close this single print, chances are you're going to come down to the point of control of this range, which, if I get this chart up and zoom back, you can see where that is. It's down here. It's just Magic, around Magic's favorite level at 22,810. I'm surprised he didn't say it today in his section, but it's coming round at that golden pocket. So it's a big level. If you do start to break below the previous month high, the single print, all these confluences that you've got there, you start to break below that, there is nothing really to stop you from going all the way back here. So you have to be very cautious. You can't be buying up here. It really is not the place. But yeah, there's going to be some trades coming. I can certainly sense it with the way that the open interest has climbed the way it has today. So be patient. They're going to come. Whether we get a bounce of that 24K region, or a swing failure pattern from higher, you've got plenty of setups. So there's no point panicking if you've missed the move. There's always going to be another setup, and the setups can, they're going to be fast. With this fast move up, it's going to be a fast move whichever we go out of here. So be aware of that, and don't get caught on the wrong side of it. Bringing you back in, Magic, and I'll unmute you.
Oh, you're good. That's my bad. I didn't realize my mic was still on. We do have some requests for Ethereum. So I will cover Ethereum today. Let me pull up the SPX and the DXY real quick. These are things I actually have not checked in on today. So it'll be interesting to see what's going on there. I was watching them fairly carefully yesterday, obviously. DXY was up at the top of its range, and that was really important because we talked about, what can happen if the DXY pushes or if it doesn't, like if it finds resistance up here. So it will be one of those things where, I'm going to take a very basic approach to it. I don't do any order flow or volume work on this chart. You can through like services like ATAS. I just don't do that. So I think it's, if you're,
Put your chart up, then.
I'm getting there. So in terms of the DXY, we have our levels here. And what you're effectively watching is, I'm pretty sure this is the previous week high. You can see we're on the hourly, so we're way down on the time frame. But what I'm showing you are some regressions. Main reason being is this was the trend based on time, right, for January. And you can see we broke out of our trend. We've established a new one. You're up kind of at the EQ of it. Now we're only halfway through the month. But what you want to pay attention to is this 2017 and 16 high here and this previous week high here at the edge of the box. Most importantly, probably, this like 104 level right here at the highs, the 103,950. If you start breaking back into this zone, this looks more like a double top. And then you're targeting this to probably come back down into this like little local market structure range here and continue ranging to be upfront with you guys. And so the bottom of this trend coming in at 103.16, which doesn't seem like a lot, but in traditional markets and Forex, this is a good size move, at least inside of like, a smaller time frame. So you'd be looking at this to come back into this region of the chart, potentially, maybe lower if it breaks down from there. We don't know. It can. But if that starts happening and Bitcoin is pushing up, that's going to look pretty good. However, opposing view is let's say this begins to come down, it puts in a higher low here or even right here, because technically this is the low that you need to see lost on the trend. If you're looking at this from purely market structure, this low is absolutely crucial. So these lows right here can be taken, and I don't think it's the end of the trend necessarily. However, the moment you start taking out this local low that you've established here at like 102, what is that? 102.586, 102.586. That's when you look at the DXY and you say, man, we're probably not only going to challenge the 102.2 level, but there's a good chance we come back down into this region of the chart potentially. That's looking well ahead. And if that's happening, I'm expecting Bitcoin to push through the yearly pivot area, maybe even make newer highs, right? However, if it puts in that higher low we were talking about somewhere in this region of the chart and makes this move up, because I would like to see this region at some point, I think it's likely. And if market structure is giving us that, that's when we can start putting the pieces of the puzzle together with Bitcoin or other risk on assets saying, okay, now this has a higher low and it's making a move towards resistance if it pushes through this area. Like I would not be looking for this to come up here again if it came back down and then gets back above. I'm not looking for it to swing fail. I'm looking for it to probably come up through here. And that's where you get that pullback or, whatever we've been discussing, where you have that like medium time frame, like, okay, price will be on the decline for a little bit potentially. And that doesn't mean that the trend is over for Bitcoin. It just means that other assets are, it's like a rotations game essentially. So that's how I'd be looking at the DXY. But as of right now, you're right at an inflection point. This is support. Bitcoin is hitting resistance. So we need to see this support either lost and Bitcoin push through resistance, or vice versa. Bitcoin starts losing support and this heads up to its next resistance, right? So that should coincide really well with the SPX. Okay, so the SPX also had a very clear trend. We've been talking about this Q1 2021 low for quite some time. You go down to like the 1 hour again, very similar to what I have done with DXY and I do with Bitcoin. Really just tracking the trend. It's just something that I need to be aware of right now. And that's all I'm doing. And you can see you're right at the trend low, which is support. So realistically, this has been a bad place to be looking for shorts or puts or whatever you're trading. And this trend to me is not really in jeopardy until this 12M1 right here around 4,049 becomes resistance. That is going to be your yearly pivot. But also you can see that would take out these local lows and probably bring you challenging into this established low down here, in my opinion. That would be a problem. Because that would signify to me that Bitcoin is likely going to reverse with it, because I don't think Bitcoin's going to decouple from risk on assets in that market. At least not yet. It could, maybe in the next halving that happens, but that's how I'm reading it. So for right now, cautiously still looking for upside. We are at resistance. So again, we've talked about this. We don't want to be looking for longs in this area unless we have a tight stop loss and it's a specific setup, because we have to manage our risk up here as the risk becomes greater and greater and the reward becomes less and less the higher we go in terms of long positions, especially if leverage is involved. So keep that in mind. But again, the broader targets of this is still going to be looking for this gold pocket up here and potentially a little bit higher than that. It's been a target of mine for quite some time. The very first target was definitely the Q1. However, we are now looking towards the fun folder, going back and reviewing the harmonic structure. We were looking for the B leg, which we got. The X to B leg right here, that pivot, if you recall, boom, nailed it right there. Now we've tried to flip this to support. So again, this lines up really nicely with the yearly pivot, telling us that we need to hang on to this region of the chart for immediate continuation. And then I'm just eyeballing this high right here above the gold pocket into last year's yearly pivot. This is resistance. Also, the next target on this structure would be the gold pocket from high to low, and that is what this is. So that's where we're getting our broader targets and how we are establishing higher time frame ideas to trade this trend, right? And what you'll notice is we still don't have an uptrend. I've covered this. This is a lower high. This is a lower high. This is a lower high. And technically, this is still a lower high, but you do have this mini uptrend inside of that downtrend. You have a low, a high, higher low, and now a higher high. You need to see that higher low continue and a higher high made, and that puts us right into the resistance we're looking at, and you watch for the swing fail of this high. I think there's a lot of people looking for the swing fail here, so I wouldn't be surprised if it pushed a little bit further through into the 12M1. That's, just something to be aware of if you're trading SPX. So that is all I've got on SPX and DXY. Let's go to the chat, make sure we're good. Leading crypto.io, Pinchy, Babaku. Sorry, I butchered your name there. We'll look at ETH. T-Shroom in the house. Love seeing T-Shroom and Dave Digital. Believe they both, yeah, T-Shroom definitely has one over at Investing Bros. I love watching his and Tim's TA. It comes on just before ours, live every morning. And they put out some static videos as well. So definitely go follow T-Shroom if you're not. They do a little bit more on the traditional market side of things. Not fundamentally, but he covers things like bond market and, rates that I don't get into because I'm more of a chart guy. So if you guys are looking for that, that's a good place to get it for sure. And Dave, I think Dave has a channel. I'm pretty sure he does. I know I'm subscribed to him. I'm pretty sure he has a channel. He has like 1,500 subscribers, I think, on YouTube. So go check out Dave as well. Let's see here. We were talking about Ethereum. So I did some quick work on Ethereum because I haven't looked at this in a long time. This is the chart that I've been working off of. I have not updated this chart in over 6 months. I quickly just updated it for some new levels just a second ago, and we'll get into that. But there is the ETH USD pairing on Binance that I have kind of my main thesis that I'm working around. This is a chart that I presented in June. I've not touched it. This was going to be the low we were looking for. Okay, the SP that opens right here. So the single print, and what we know about single prints is anything below that is, well, there's nothing there. However, in this case, if a trend is going to be defended, the single print is oftentimes bounced from, right? We don't want to find re-entry into those. And we did. It held as support. Now, it did give you an entry. If you went to like the quarterly chart, which this is going to get somewhat messy, somewhat quick. This was something I was watching, was this quarterly low right here, because we had this open. And what you want to see is essentially the lows here now defended. So if price returns to this level, we need to see demand coming into the market between here and the low, because if you start losing the open, you're probably going to make a new low, right? So what did you do? You came down to the quarterly and pretty much to the T. I'm on the 5 minute. That's not going to work. Right here. There is your quarterly low, and it pretty much nailed the bottom, like exactly. So this was your support. So if you lose that, you are probably going to break this single print, in my opinion, and make a move down. I think there's daily levels down here as well. You can see like some dailies that had settled up in this region of the chart. over here. Going to the daily really kind of, yeah, there you go. You can see that there's like daily levels as well down in this region where there were clearly buyers coming into the market, right? And you have this higher low structure. So it did leave these lows intact, which I know a lot of people want to take in, including CVO. And I thought it would be a juicy trade as well. But however, you had to know that $1,071.02 was the beginning of your support, and it would be support, right? So now when we look at the broader range, just high to low, we look at it like this. We say, here's my EQ. We're trending above the EQ. It is now support along with this 1418 merged value area low. So this is just a high time frame merged value area that I pulled on ATS a long time ago. It could probably be updated, but it was also the prior all-time high. And coincidentally, the last 6 months of price average at 1409, if I believe. And making this a really big inflection point. And my thesis was if we get above this, we'll probably challenge 1784 over time. 1646 is kind of a rough TPO value, a TPO value area low. Again, these are over 6 months old though. So you have to think that I have not updated that chart in a long time. And I probably should, but this has been getting it so well that sometimes you stick with the ideas that you've got. And so now we need to talk about $1,700 because that is the next, 1785 is the next pit stop for Ethereum, in my opinion. And reason being is if we go out to the monthly chart, you can see I have the July high already marked on my chart. Where has supply been coming in on a monthly basis? It's been the July high right here. We have not closed above this level on a monthly closing basis in a long time. So in order for us to see some form of a changing of the guard, so to speak, or a shift from this range, this 1785 level to me is very, very important because at that point, I'm then targeting 1988.70. You've got resistance in between there somewhere in like, the 1870 region. You got 1946 here, which was an old 6 month pivot. However, the new yearly pivot comes in here. And so I'm looking more for about 2K. I'm looking for a new high to be made potentially if 1785 is flipped. I'm kind of knowing that these are pit stops along the way, so I'm not freaking out by any means. But if we start closing weekly and monthly candles as those are approaching quickly over 1785, that is going to be the level I want to see held. It's been absolute monster for this range. Been really great. You knew up here you should be taking profits. So if someone was in a trade from lower, this would be an area that if it was a trade that I was considering taking profit, I would at least lock something in this region and then leave the rest to ride, because I do believe that if we make the move through, basically we'll call it $2,000, right? 1785 is a big level. 2000 is the next one. If you get through 2000, I'm actually looking up quite a bit. Go out to the 3 month chart for this. And I'm going to get rid of some of my NPOCs as well to clean up the chart. You can see that all I have on here now are basically high time frame averages. Most of these are calculated by hand because there just isn't a tool that lets you. So when we look at this, what we will notice is we're going to do some really basic line work. And this is Q1 of 2022. So we now have, let's do this. Let's make this solid so it shows up better, and we'll increase the opacity so that it's brighter. And it says Asia low, but it's definitely not. It's the Q1 2022 low. So we're going to mark that. Right. So there's our low that we know is just above the high here. So again, what are we looking to do with this information? Well, it's telling us that we need to get back above 2200, and that if we come up above this high, $2,000 needs to act as support. At worst case, 1785 if there's a larger scale pullback. Just high time frame only looking at it. If you make the move in here and you find rejection, we still need to see the reaction here at like the 1950 to 2000 mark. If lost, we now need to see 1785 be support. Otherwise, this could be something where we come all the way back down into this zone, which then you're just looking at this data right here and you're saying what's going to happen between this data and this data. You probably just pull point of control and figure that out. But that's not on the table yet. So just prepping you for the future if we have that conversation. So this is really going to be an inflection point. If you get through this, I think 2600 is what I was looking for. If I go back to my volume on the USDT chart that I pulled on ATAS. And the reason I did ATAS for the USDT is that was actually the one with the best data. So if we break through this level, I'm looking for 2600. That is my next target from a volume standpoint. The only thing that I would be aware of is you had some daily highs on Ethereum, I believe just above right here at 2457, right? So you can see that you have an old 6 month pivot and these like local daily highs. So, we're still looking for 2600 in my opinion. However, we do need to be aware of this region of the chart just because this is kind of like a local range high, just like you have the same thing here. So again, these might not be actionable areas when we get there. They certainly can be with the right reaction and trade setup, but it doesn't mean you have to take a short here or sell because you may not see the rejection that you are looking for. Just like Bitcoin, we haven't seen that rejection that makes me want to take a short yet. So it is one of those things where I think Ethereum is short-term bullish. I do think we're probably going to challenge into this 2K region. I'm just really going to be focusing on 1785 in the short term. So if you're looking for the next real prominent resistance, it is going to be this last local high, this July high right here from back in the day. If that's flipped, we go to the next one. I think it's safe to say that we'll probably hit 2000, but you could maybe even extend that target up to here and then extend your next target up to $2,500, $2,600 potentially, and just be aware of those. Now, if anything gets really, really crazy, I mean, there's not much between you and this open right here at 32.82. So you could potentially see this if we start flipping $2,500 and getting back into this structure. You would then just be looking at this in terms of, do I have anything here in terms of quarters? 1, 2, 3. Yeah, I've got quarter one and quarter two here. Let's actually just pull 4 months worth of price action and take a look. And we'll go to the daily for this because I think that's going to be more relevant. Let's see what we've got. Yeah, it does. It puts you right in that like 3K zone, which this would be technically more of a market structure style range, in my opinion, which you clean this up a little bit right there. But yeah, you're still looking at, about 3K up to maybe as high as 32K, or 3,200. That's, getting ahead of ourselves because we're skipping over resistances and areas that we need to have marked out and that we need to see the interaction with. But that's how that works. So 1785 is key for now. Got to see that claim to see any kind of continuation to even have the discussion that we just had. And we go from there, right? So this is your next level to trade and potentially see a reaction from. Hopefully that was helpful. I'm trying to give a really broad high time frame view so that you guys are getting more of a sense of how price is going to interact, I think, over the higher time frames and over charts, because charting is one of those things that if you want to get really good at it, it takes a lot of practice and a lot of experience. Those things go hand in hand. But if you guys are wanting to get really good at charting, I would actually come over to the DXY because you can't pull a volume profile on this. All you can do is pull horizontals and establish key highs and lows in ranges. And that will actually do wonders for your chart game. It'll give you lots of practice of not using any indicators. And that is really, really important. Understanding where a key low is, establishing, okay, this is where the trend would be in jeopardy if lost. It's going to give you that invalidation and give you guys a lot of skill going forward that you can apply to any chart. Doesn't matter if it's Forex, SPX, Bitcoin, Quant. Quant is another one. So Quant, if you guys recall, is one that I am trading, right? So I'm in Quant, very happy in Quant. I got all of my take profits on this move up. I front ran my own level at 166. You guys know that I like my 3-month chart. This is the 3-month SFP, just like on Ethereum, we had the monthly SFP there in July. This is the 3 months. So we've not closed a quarterly candle above this level. And I knew this would be a pit stop level, and it was. This is your trend thus far. We came down to the trend low and the developing quarterly value area low, backed up by our yearly pivot, backed up by the gold pocket, backed up by Q4. You can only trade this with spot. Excuse me. So for me, I've been buying spot, so I'm not as worried about putting on risk in this region. And I didn't buy the exact low. I waited for the reaction. And all I did was I marked out my previous low here, guys. And once you flipped this into support, off you go. You're looking for the January VWAP close, which we're going to get rid of. And then you had a monthly pivot that was coming in here that was just absolutely clutch. To be honest with you guys, this thing was pretty money. You can see right here, double bottom, claim the monthly pivot. What are you doing if you claim the monthly pivot? Once you put this last secondary low in, I'm targeting the monthly pivot maybe as an early take profit if you're being aggressive. But being a spot position, I'm looking to get a little more out of it. I'm going to go to 145. That's a take profit for me, just to lock in some price, just so that if it does come down and I get stopped out of my position, I've locked in some gains, right? That's all I'm doing. And the rest of it, I'm going to leave to run to higher targets, potentially try to take this high. That's how I'm playing that. So I'm looking for 166 still, and then we evaluate from there. Now, if you get through 166, I can tell you guys that the targets on this, it's a pretty broad range. So I'm going to get rid of some of this stuff here. And we'll look at the overall high time frame and go out to like daily right? And you can see that we have a larger structure range right here lining up with the 2022 open, which the yearly opens are always key. You've got an overall gold pocket, high to low. Very, very clean, very nice. We get through 166. I still think we have a leg up to 178, right? I think that's where we're going. So for me, that's how I'd be reading that. Now, if we were taking away all tools and we were just saying, let's only look at market structure, what are we looking for? Go out to the monthly, right? Now we're on the high time frames. What do we notice? We've not closed the monthly above this level for one at 166. And if we start doing that, we're looking for 178. However, this has been the resistance zone right here. It's very clustered up with averages. So this was an area I was looking for on this wick. It was a target of 228 basically, or well, 210 to like 221, a wick through to 228. This is your next high time frame resistance after that. So if you get through the yearly open at 178, this is your next target. If we start breaking back down, 145 proves to be too much, or 166 or 178, and you start falling, and we were seeing the market reverse, and that this is all looks like a bigger, not bull trap, but you know, the market is going to have to cool off, and there will be corrections. So a larger correction comes. You have to know that as long as you're above 105, things are pretty good. This is going to be the low you want to hang on to. So even if it reversed all the way back down into this area where the local gold pocket is as of now, it won't be there later. I'm still looking at this region of the chart with interest as support and resistance. And you can see right here with the wicks alone that higher time frames support this as well. You can see the interaction with this zone on the chart. And I would be happy to bid this zone again for at least a bounce, or look to swing out of that, you know. So that's how I'm reading the market. Anything above 220 on a closing basis, and you're just targeting your NPOCs up here around like 272, maybe as high as 361. And if you guys want to see what I gave last, it was like September or October, my high time frame idea, and it says idea only, was this right here. Was in for longs in this region, which we almost got exactly to it. So to me, this is good enough. You're looking for longs, and what we're looking for is a return to that weekly NPOC, and we're just paying ourselves along the way, because you have to pay yourself. There's a quote that I was going to put on my Twitter, and it says, "It was never my thinking that made the big money for me. It was always my sitting. Got that. My sitting tight. It's no trick at all to be right on the market. You always find lots of early bulls and bull markets and early bears and bear markets. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which should show the greatest profit. And their experience invariably matched mine, and that is, they made no real money out of it. Men who can be both right and sit tight are uncommon." So what that means is that people can time the market. However, they don't plan the rest of it. They don't have take profits lined out. They're not paying themselves. They're not doing the things that they need to do. And sometimes that means that when you take this position and you've taken an early take profit, you get back in, that's almost too much. You need to let these targets ride out until this little bull phase is invalidated. If invalidated and the trade is wrong, we have an idea that's still there. And the idea for this was based on harmonics. So we had these two harmonics that we played out. Now we're looking to play out a larger idea like so, okay? And this was the timeline that I was looking for it to come in, and I'm looking for this in the end of the year. So like that Q4 pump on Q&T. Only an idea, guys, only an idea. We still have to take this level to level. And so I do things like I showed them in the group, how I plan my trades, how I take my take profits so that I'm not feeling the FOMO of I took too much position and now I'm not getting anything out of this, right? So I'm pretty diligent about how I do that. I do incremental take profits to make sure that I'm getting paid, but I still have skin in the game and I'm not missing out. You know, that's how I've managed that Bitcoin trade. I'm going to post that I took another take profit at 24,666 today, and go from there. It looks like Bitcoin is making that leg up as well. So I'm going to turn it back to Bitcoin, because look at that. We're getting a little bit of support here, but really kind of hanging around support longer than it should, in my opinion. So we'll see what happens. There's 25.2. This is our last local high. We've made a new high, so we have to watch for the swing fail. And then we're looking for 25,838. So very, very simple. Caro with the August high tap. Very good. And let's see how many people are even in here. I don't know that there's that many. You know, I
want to quickly go over the order flow of this move before we potentially get a swing failure pattern here, which I think is now occurring, but I'll go through the order flow quickly. So you can see at the bottom, had a ton of shorts enter. You can see here, huge open interest, really negative delta. Again, negative delta, positive open interest again. And then at the bottom, you squeezed out a few of them longs that entered early in the morning. Then we get this move up, starts with a short squeeze, taking them out. But the thing that you've seen up here is a ton of buying, a ton of people breakout trading, which is one of the best things if you want to trade an SFP, because trap traders lead to fast moves lead to quick profits. So, now we've swung failed it. What you really want to see is, well, you want to see some selling start to take place. Right now, you've got negative delta, but the open interest is flat. So that effectively means that all these positions are getting taken over. So you've got to hold fire until whatever is there, whatever wall is there holding price up, diminishes, and people then start to really sell. When they see this take profit, this swing failure pattern is occurring, you can look at this candle here when we've had that huge amount of longs come in, and then when we get below that, granted it's a bit late to the move, but if you're trying to be super cautious with this trade, losing some of these candles where these buys have really come in with force is going to be quite telling. But this looks pretty solid for a swing failure pattern right now with the selling balances you've got. So I need to end the stream and go and try and take a trade because it's coming down hard.
Very hard. You're now at the Asia high, just straight through the Asia high. Breakout traders absolutely wrecked. Volumes coming in. Whoa, there it is. Back to the POC of the day and 24/7. That's the level that needs to be held. Well, probably down to like 24. I would say that the low of the day here at 24,285, where the new China pivot has put itself, I would put a little bit of emphasis on that because if that's lost, well, you've effectively gone above, taken everybody out, and now you're just going to nuke through and probably fill in that larger single print that Max was talking about earlier, or that void, I guess, because there's really effectively nothing there. Beautiful. So
I missed the trade, raging. But yeah, look, when you put these buys underwater, this is why I said in the group when we're at the lows here, these guys were buying into the comes on, opens right here, the previous day high, and these guys were just shorting indiscriminately. And I said, like, why are they shorting here? And as soon as you get above them, you start to get some buyers come in, you get the move up. As soon as you get the buyers coming at the top, like, it baffles your mind when you're looking at order flow and you see this type of thing where people are just buying in places where you're thinking, what the fuck are you buying there? Sorry to swear, but they're buying up here at the absolute high, where the chances are it's going to be a swing failure pattern when it's such a key level, and they just get wrecked. Happens time and time again. It really does in this market. Bitcoin chases liquidity. We say it all the time, and high open interest leads to volatile moves. The move up when you're looking at this on a really low time frame, you did see some shorts get taken out and some positions changing hands. But then what happened? You then just have more buyers come in, and it just baffles your mind. And then as soon as it starts to reject, they just get wrecked. So maybe we come back up, potentially test whatever the local golden pocket is. I've not pulled that one from on a really low time frame here, and then maybe that gives us another entry, or potentially even a rejection from the high that was made this morning, the Asia high. But that could potentially be the entry that I try and get in now. But yeah, these moves come fast. When you're seeing high open interest, they come fast. It's why order flow just really is key, in my opinion. But yeah, I'm pretty much done, Magic. I can't hear a word you're saying, mate.
I was saying gold pocket around 25K, guys. Pull it. Watch the reaction. We'll see what we get. As of right now, bouncing off the 24,700 region. And so we'll see what it wants to do here, see if it continues down or what's going on. But I am going to hop off. We've been live 50 minutes. And thank you to all 26 of you that sat this through. And the likes that you guys gave to the channel, I'm pretty sure there's a substantial amount today. So I do appreciate that. And we'll catch you guys in the next video.